Hello and welcome to another episode of the Consumer Credit Matters podcast. I'm your host, William Black, and today I'm joined by Sid Siddhartha. Sid is the CEO of a company called Intain. He's been on the podcast before, and today he joins me for a short and solutions-oriented discussion around the problem of double pledging. Double pledging has, simply defined as selling the same collateral twice to more than one lender or ABS investor, as the case may be. And it's really risen to the headlines in the wake of the sudden and surprising Chapter 7 filing of a subprime auto company based out of Texas called Tricolor. Now, I've had a separate podcast that goes into some of the allegations and issues emerging from that Chapter 7 filing. You can look for that on YouTube or any number of other social media platforms. And I've also written a newsletter, a LinkedIn newsletter, about the details of the perfection process for the underlying collateral. This conversation with Sid is, again, more about how technology, off-the-shelf technology, can be used to mitigate, if not eliminate, the risk of double pledging in these financing arrangements. Whether it's digital ledger technology or blockchain technology or encryption technology, this is a technology whose time has come, and you can file this under let no good crisis go to waste, perhaps. But certainly the Tricolor situation should catalyze the industry into kind of moving into the modern age. And I think if you stay tuned for this conversation, you'll certainly learn how technology can be brought to bear for this type of situation, which again is really ever present in any financing, consumer financing arrangement of scale. Do stay tuned. Thank you. Sid Siddhartha, welcome. Well, I should say welcome back to Consumer Credit Matters podcast. How are you doing?
Hi, William. Good to be back. Thanks.
Well, it's great to have you back. I know, you and I were talking offline, and we have a pretty big story to talk about where you have some real value-added knowledge to bring to what is now unfolding in consumer credit and particularly securitization space. And that is, of course, the Tricolor, I'll call it the Tricolor situation. And I should say at the top here that this situation of bankruptcy, Chapter 7, suddenly and surprisingly with massive downgrades to their ABS bonds and some big warehouse lender firms already announcing hundreds of millions in write-downs due to their exposure to this credit. I'm going to put it under the umbrella of allegations because you and I don't think anyway, I know I don't have firsthand knowledge of this. So we're not going to be the oracles of facts and truth as they are still unfolding, as we read every day a new increment of information being released into the public sphere. But what we're going to talk about is something very specific coming out of the allegations, and we can try to broaden this out and really try to come up with a solution for the double pledging allegations that have been discussed. Again, we're going to extrapolate away from Tricolor specifically. I think it's fair to go right into it, Sid, and ask you, what is it? We called it, we were talking before, this is a technological solution as you see it to some of the very important steps that you need to take in order to perfect a party's interest in the underlying contracts, the chattel paper that evidences your interest in both the loan and the metal or the car, the vehicle itself, and allows you then to have first priority and perfected security interest in the cash flows and, again, the metal, the car, so that you can repossess it if you need to. So these are very important aspects of the financing chain that are at least alleged to be in question in the case of Tricolor. So with that context, Sid, maybe you can introduce us to some of the solutions to these issues as I've outlined them.
Sure, William. So the double pledging issue is related to financing, but there have been concerns about the asset quality. How did it deteriorate so quickly? What was the quality of the underlying collateral? Two separate issues. One, which should be generally caught in the lending process, and the other is in the financing process. And then the other side of this 2x2 matrix is oversight, maybe if you really stretch it, incompetence in some places, or fraud. And we don't know what is oversight and what is fraud. So with that disclaimer, one of the things which has been talked about is timing, that
Yeah.
how could you suddenly directly go to chapter 7, right? What were the early warning signals? At least one of the lenders or investors, in this case, supposedly a week or few days before the chapter 7 filings or the public announcements, kind of sent out market information about the potential write-offs, etc. But how much before that was information available? So that's why you cannot do much, let's say, about the quality of underwriting, but you need to get early signals. Means if chapter 7 filing, which itself is an extreme case,
Right.
right, should not be the first. The way we look at it is in securitizations, for example, and again, I'm generically speaking, the investor is getting to know about the underlying asset up to 55 days post facto. So you start the month end process, which means that you are anyway 30 days post facto for something that may have happened at the beginning of the month. And this process just continues. You keep adding a week, 10 days at every step, and you end up with 20, 25 more days. So it's like month end plus 25 days is design. So this is, as I said, there's not oversight, nothing.
Got it.
And the reason everybody gives there is that different servicer formats, it takes time to reconcile. Everybody talks about how much it will cost and why should anybody pay. Now, that for me is very, very outdated view of technology. Today, irrespective of what format the servicer gives the data in, whether the servicer is willing to invest even a penny in standardizing data, using AI, it is easy to map data and ensure that you are reporting underlying assets in real time. So there could be other reasons, but cost and IT project and effort in IT implementation is no reason. And that is something that we do currently. We use AI to map to a master template. That master template is also compliant with ESMA reporting, Bloomberg reporting, etc., etc. And then we take care of all the computations from there on. So at least you should get the early warning signals, because you can plug in the best quality analytics on top, but that analytics engine is feeding off the data which is coming to it. So if the data is coming to it
Uh-huh.
55 days hence, then the state of art risk analytics solution is just hamstrung by the data.
So if I can just summarize what you've said so far, you can compress the timeline by which investors or any participants in the ecosystem will be aware of how the collateral is performing. Is that a fair summary?
Exactly. And the trustees can still take time for the actual formal payment waterfall based on which they are paying coupons, because they have to do bank account reconciliations and all that. So I'm not disputing that. But the actual reporting of underlying assets has no reason to wait for the formal payment waterfall and coupon.
And to what degree do you think that timeline can be compressed in an ideal situation?
Is we are getting live data feed from the servicer than real time. So
Real
some of the
time.
deals that we are running, the whole FIS integration is that all those hundreds of FIS banks, if their transaction runs on our platform, that will be real time or in 6 hours or 12 hours, whatever is the batch processing of the FIS core banking system, from up to 55 days to near real time. Yeah.
Yeah. Wow. That's a big,
Yeah.
from 55 days to real time is a pretty big improvement.
And I think here the way industry has failed is these silos of technology. And if you are plugging in islands of technology, howsoever great, and you are not tracking the whole data flow. That island of technology will not help. And that's why, means in all this conversation about Tricolor, is anybody really talking about how great the borrowing based calculation system or analytics
Right.
system or risk triggers was JP Morgan using or Barclays using or Fifth Third using or anybody? Nobody is talking about that because they're completely redundant. Now, coming to the financing side on double pledging, which is the bigger, more talked about issue. Now, in case of double pledging, the first thing is that can you have an immutable, auditable, portable asset record? And currently, what happens is sample based verification. Now, what we have been doing there is use AI to run 100% verification on all documents. So, check consistency of information across all documents, reconcile documents with the data, and also check it against the financing rules that the lenders may have prescribed. So you may have prescribed the make, the year, and even slightly more complex rules. I'm taking some simple examples. Does every loan meet that criteria? This is easily possible to be done using AI. Now, once you have done that, let's say a verification agent or a custodian, now what we can do using blockchain technology is take the verification agent certificate, so AI reviewed data, re-verified by the custodian, because there could be errors done by the AI engine as well, then certified. So I have reviewed and verified data with an encrypted certificate attached to it, which we then record as a non-fungible token, a technology people got familiar in case of paintings, etc. So it's almost creating an SSN or a biometric footprint for every loan which is recorded. And no borrowing based calculation happens unless and until that NFT is getting mapped to that facility. And once it gets mapped to a facility, that is locked. So you can't replicate it. You can do nothing with that NFT again. So the borrowing base is not based on a trust me Excel, and it is impossible to double pledge the NFT which is representing the loan. So I'll just pause here.
Yeah, I think I want to take a step back because I want to make sure we're not losing folks on in the technological aspect of this financing arrangement, which is a little complicated because in the case of Tricolor, for example, they had, at the very least, they had multiple warehouse lenders, and they had ABS issuance platform, and there is a highly orchestrated but tried and true legal procedure to follow to ensure that you have perfected security interest in the underlying collateral. It's been in place for decades, and it's worked pretty well. Again, I've outlined that in a fair amount of detail in that other news article.
Right.
The situation can become problematic. You have multiple warehouse lenders and possibly ABS investors potentially claiming the same collateral.
Exactly.
And that is the nature of double or even triple pledging that can take place. Your technology comes in, and the way I would frame it or describe it, you tell me if I'm wrong, is you kind of offer a technology that would centralize the tracking of these interests in each contract and collateral in a way that is encrypted, immutable, also available for anyone on the chain to see at any given time. That anyone, meaning in the permissioned blockchain. They're not talking about in the public domain here. We're talking about the ecosystem of lenders and other partners in the financing chain, but not publicly available. So you have a very call it discoverable and um, a record of the transfer of these collateral that would prevent double pledging. It's cryptographically impossible to double pledge with that system in mind. Did I describe that okay?
Exactly. So the way I would want people to think is like when you said that something has to be released, moved from the warehouse to securitizations, which happens typically in so many cases. A release means genuinely releasing from a digital lockbox. Moving from one person to another is genuinely moving a digital hallmarked token to another person. So that's why it's immutable, auditable, and portable. And obviously, it's unique for that particular loan.
Gotcha. Okay, so a lot of people are talking about the technological solution or a variant of what you've just described um, as the way to go. And it's not that new anymore. This has been around for a while, but the industry has been slow to adopt. So here we have this crisis as it unfolds will be the catalyst to get the industry to modernize and update. What are some of the obstacles, the hurdles from your perspective that you see in some kind of massive adoption by the industry to embrace this technology? Or maybe that you're not seeing the hurdles, and maybe it's a lot easier than people have made it out to be, because there's certainly been resistance, and I get it. I mean, there's a lot of inertia behind, hey, if it ain't broke, don't fix it. And I think there's also a concern about, well, am I solving one problem only to invite other problems? Which I've certainly heard that concern voiced among participants. So what are you hearing and seeing from your perspective in terms of resistance or hurdles to adopting this technology?
So I think we should use kind of change in administration and the regulatory environment in the US as one inflection point. So means the receptivity has changed completely. For example, one of the trustees we work with has been using data on our platform or has used even for their OCC audits. So people are using it for a trust as a trust-based system, as against a year back when everybody would have been even scared of the word blockchain to be associated with that name. So that's one big change. Second is the specific approach. I think on tokenizing, I guess there the blame lies, and I've been repeating this at many forums as well, with the people who have pushed the blockchain proposition. Everybody has focused on blockchain to create a token for trading, for liquidity, etc., which is what the final instrument would be. So it's akin to tokenizing the actual asset-backed security and a fund, etc. Here, it's not the NFT which is getting traded. Here, we are using the same technology just to establish a trusted record of an asset. So it's far less fancier use case, but in terms of risk mitigation and addressing an immediate industry problem, uh, it's both far palatable and an easier use business case to make. Because of which the adoption we see, so for example, you talked about multiple lenders and a facility. We are running a facility where there are two separate facilities, one for a merchant cash advance fintech, the other is for a charge card player, financed by 5 or 6 banks, and it's in use. We are onboarding about $500 million of assets, a process that's starting uh, across aviation finance, commercial real estate, etc. Now, with the Tricolor situation, suddenly it's lot more attention to this, and that should kind of create a snowball effect. We will know. But the situation is far different to what it was 9 months back, when these people were really scared about, is blockchain really Bitcoin, and is SEC going to come after me if I am seen to be associated with anything blockchain?
Got it. So are you seeing, um, look into your crystal ball, Sid, and you're having a lot of conversations today. If someone is interested in bringing this technology to their financing platform, what kind of timeline are you talking about in terms of adopting this kind of technology, or if they're really going to go in feet first?
Yeah, means for an individual lender to come on board, I think there is just, so we have talked to a couple of lenders who really want to get on board, just because in some cases it's self custodied, but you will have, like, before the end of this year, also in next couple of months, 3 4 major players adopting this, because they are facing questions from their investors and lenders, and they will do whatever to provide some additional assurance to all of them.
Sid, I think we covered the technological promise that's out there pretty well. Did we leave anything off that you wanted to add to the conversation?
No, just wanted to reiterate, because I mentioned it in the passing. Since we spent a lot of time on blockchain, it is also important to bear in mind that this is facilitated because of extensive use of AI. That it is what is allowing you to diligence 100% of the loan docs and record it. So, for example, even if you weren't to use blockchain, just the fact that you are diligencing 100% of the docs moves the needle. And then that you are able to create this immutable record of that loan on chain, accessible to the whole network. So it's a combination. And that's why I say that this is the second step. And the third step is that till that NFT is mapped to a facility, and which is less important in securitizations, because it's a one time transaction. You can do extensive diligence, take your time, and forward flow agreements and credit facilities every other week. You're mapping additional collateral. So, till that is mapped, the borrowing base should feed off automatically from that. It cannot be somebody sending across an Excel sheet. You just upload to some borrowing base calculation model, it calculates it. Then again, you start running one parallel universe for calculating your borrowing base while the custodian is keeping custody of the asset.
Got it. And you mentioned earlier that you're working at least with one company with this platform already up and running. So this is in the here and now, or is this still something that has yet to be adopted by anyone in the quote unquote real
No, no,
world?
very much here and
Yeah,
now. And means I don't want to take the thunder away from whatever announcement FIS is going to make. But since I've talked about it in an interview recently, so we are integrating our system with FIS core banking systems as well. So, for example, any bank who's using FIS core banking systems gets a seamless access to this technology. And the first bank is starting to kind of convert their assets into NFTs for tracking and financing as we speak. So, yeah, means
very good.
much wider adoption.
Awesome. Well, Sid, thank you very much for coming on the pod one more time, once again, and really sharing with us some important, I think, important facets of the industry that are being discussed now as we kind of process what's happening with the Tricolor situation. So really appreciate it. Thank you, Sid.
Thanks. And we should pass on, I guess, our best wishes to a friend of your pod, the folks at Vervent, Julie and Lou and everybody, because they have taken the arduous task of cleaning this whole thing up. And yeah, means the industry looks forward to what they can do. And yeah, means they are best equipped to handle
Yeah,
this.
you're referring to the backup service or Vervent and the
Yeah,
folks
who has
there,
taken over the Tricolor?
right. And I have a podcast with Vervent, with Lou and Julie, and we did prior to the Tricolor
Yeah,
Chapter 7 filing, but it is still instructive, I have to say, in terms of what backup servicers think about and do even prior to and really preparing for taking over servicing responsibilities. And yes, usually that is under a situation of duress, as we have here, in all likelihood. So, yeah,
exactly.
best wishes to Vervent, and everybody else who's left picking up the pieces now. It's quite a mess. But again, Sid, really appreciate your time today, and thank you very much.
Thanks a lot.